if you want to repeat that.
Yes. Go ahead, John. You can repeat that, and then it'll be on the recording for this.
Okay, great. Thanks, Nicole. So this is John Thorpe, president of the LGBTQ Alliance. I just say the Alliance. It's like a whole alphabet to say, right, sometimes. But anyway, I unfortunately cannot stay on this call that long. I've been called into a symposium planning call. The symposium, if you don't know, is next Wednesday and Thursday, just a few hours a day. But we are very, very fortunate to have some U.S. senators and Congress people and state and local government figures. Part of the conversation, Sage, is going to talk about the elderly LGBTQ population, as well as NAR. And we've got several real estate leaders that are going to be on as well. So we are about advocacy, advocacy, education, and networking. And so this is the best thing that we can do for advocacy. And so the more people that we have to show up, the more seriously we're going to be taken, you know, I mean, that's just what it is. And so they've given up of their time. I know the real estate industry is crazy now, but so is the government. And so we're all making this special effort to be part of that. So I would love to see a lot of faces on there, and it would be great. But more importantly, there's a chance for us to take our advocacy to the next level. We want this, we desire this. And so here's our opportunity. So show up. All right. So thank you all.
Thanks, John.
Hi, I'm Jenni Welch, the Wisconsin chapter president of the Real Estate Alliance. I am with Nicole Kane and Sarah Hartstein. Did I say that right?
You did great.
Yes. All right. So today we're here to talk about WHEDA and kind of like what is WHEDA and how it can help your buyers and possibly sellers with their home purchases. So go ahead, Nicole. Thank you for being here with us today.
You bet. Thank you so much, Jenni. I really appreciate the invitation. I'm going to share some stuff about WHEDA today and just kind of talk about what's going on in the industry, kind of behind the scene with the GSEs and HUD, and how that's going to impact you guys going forward as realtors and what you might start to see in that trend with some of the first-time home buyers and some of the offers that are coming in. But I truly thank the Alliance for inviting me here today to talk about WHEDA. Obviously, it's something I'm very passionate about. WHEDA is the Housing Finance Authority for the state of Wisconsin. And I have to apologize, my screen with my PowerPoint is above me. So if I'm looking up, that's why. So obviously, legal disclaimer, I have to state that anything we cover today is true and correct as of today, but in this ever-changing industry, if you need any right up-to-date information, that will be on WHEDA's website. So here's kind of just general information about WHEDA. Again, we're the State Housing Finance Authority. It consists of single family, multifamily, and community and economic development. So we all kind of work together, but in our own somewhat silos. Obviously, in single family, we focus on single family purchasing. We work a little bit differently than some other agencies. We are an authority. We're not an agency of the state. So we don't receive any funds from the state to do business. We are actually self-funded by mostly single family in the loans that we sell to Fannie and HUD. So we are a Fannie Mae and HUD seller servicer. But we don't lend directly to the public. We work with over 130 approved lenders throughout the state of Wisconsin. So my role is to educate lenders. I do a lot of training, develop training on WHEDA products and services and how we can build better communities. So things outside of this, that's my job as I work directly with the lenders. And we are doing a lot of community outreach, which we'll talk about in a little bit. But this allows the borrower to work with someone local in their area to get the loan started and go through the loan process. And then in the end, WHEDA actually services their loan for the life. So they'll be able to reach out to WHEDA in Madison with any questions they have in their loan. We do have income and purchase price limits, obviously, because of the fact that we're a housing finance authority. Our mission is to provide affordable housing finance options for those within the communities. So low to moderate income, but I would say that our income limits are, well, they're generally 100 to 140% area median income. So they're fairly wide. In Dane County, for example, in Madison, someone in a 1 to 2 person household can make just over $100,000 a year. So WHEDA is very easy to do business with. We try to basically cater our business to our lenders and how they best suits them, because obviously not all banks, credit unions, and mortgage bankers work the same way in the same business model. So we actually offer 3 different delivery channels, 2 of which WHEDA underwrites the file, 1 which they underwrite the file. So as a real estate agent, that's something when you get an offer that is WHEDA, that may come into play. If you're looking, at contract times, who is doing the underwriting and what their turn time is. WHEDA's turn time is about 24 to 48 hours once we have the full file. So typically pretty fast, but if it is a correspondent lender, which are some of the very larger lenders that have underwriters on staff, they are on their own timetable. So I'm just putting that out there as a disclaimer. And then again, we service our loans for the life of the loan. So we offer 2 first mortgage options. Truly, it's conventional and FHA with a few nuances. So when you see an offer with WHEDA conventional financing, it's truly conventional financing. So it's a conventional appraisal. It's nothing different than someone coming to you with just standard conventional financing on their offer. And then if it's FHA financing, obviously it's an FHA loan. We just have a few nuances in as far as that is concerned. So either a conventional appraisal or HUD appraisal, depending on what the financing is for that borrower. We offer 2 down payment assistance programs. So this is truly what makes WHEDA a little bit unique. We offer 100% financing on all property types except 2 to 4 units. And if someone is buying a 2 to 4 unit, they only have to put 3% into the transaction, so of their own funds. So if they're pairing our first mortgage and down payment assistance, again, they can do 100% financing. And we have one that's a repayable loan that they pay monthly on a 10-year term, and then one that's a 0% deferred payment loan that they would pay off when they sell the home or refinance out of their WHEDA first mortgage. That does have separate income limits that are a little bit lower. Just note that if they have a DPA, they do need that DPA addendum with the offer. So this would allow them, the DPA can either cover their closing costs, their down payment, or sometimes even single premium MI. If they want to pay their mortgage insurance premium in one lump sum upfront, they're able to do that. One of probably the biggest thing about WHEDA and why 97% of our borrowers are first-time home buyers is because first-time home buyers, eligible veterans, and people buying in a target area get a reduced rate with WHEDA. So a first-time home buyer to us is defined as somebody that hasn't had ownership interest in a property in at least 3 years. So they could have owned in the past, and then it's been 3 years since then, so they would be considered a first-time home buyer again. Eligible veterans, just we try to explain that when the state went away from the state VA program, we kind of put this in place just as a another option for veterans. If veterans aren't able to use their benefits, they have a funding fee, maybe it's an appraisal issue. This is a conventional loan that they could use to get a reduced rate, and they just need a DD 214 with honorable discharge. It does not use their benefits. It's just a conventional loan with reduced rates for veterans. And then borrowers purchasing in a target area. This is very important and maybe important to you guys. There are 15 entire counties in the state of Wisconsin that are considered target area borrowers to WHEDA. They're federally designated. So it means anybody buying in that county gets a reduced rate. And actually, target area borrowers get the best bang for their buck with WHEDA because of the fact that they get slightly higher income limits than anybody else. So they get a lower rate, slightly higher income limits. It's really to increase growth in those areas. And most of those counties are in northern Wisconsin. Again, we don't require a borrower to put any money into the transaction if they use our first and down payment assistance. Sometimes they'll stack it with the Federal Home Loan Bank Chicago DPP funds. They can put additional financing behind ours or grants, things like that. It can go up to 105% combined loan to value to cover closing costs or things like that. Obviously, there can be seller concessions and things like that. But We do not allow that. We don't allow them. We don't require them to put any money into the transaction unless it's a 2 to 4 unit property. So on the conventional side, we offer financing on single family residence, 2 to 4 units, and they do have to be constructed over 5 years ago. It's a bond thing. Warrantable condos and warrantability standards are Fannie's. We follow Fannie's guidelines for that. And then double wide manufactured. And that does need to be on owned land. They can't have it in a leased space or something like that. It does have to be on owned land. We are also, just on a side note, looking into the MH Advantage program, which is also a Fannie Mae program that would allow a borrower to purchase a brand new manufactured home. They would order it, a double wide, of course, and purchase the land and all the cost of the transportation and setting up the land is covered all in that one mortgage. So it's something we're really looking forward in, because I'm sure you all know that the affordable housing space right now is very, very limited. A lot of buyers that are pre-qualified as first-time home buyers or those in the affordable space, and not a lot of properties that are not a lot of inventory for them to choose from. We also, because FHA requires a 3.5% down payment, our DP, we have a waiver from HUD that allows us to use our down payment assistance to cover that 3.5%. So again, they don't need to put any money into the transaction on an FHA. And on FHA, we offer single family residence, HRAP condos or single unit approval process condos, and then 2 units only. Here's, I'm a little ahead of myself, evidently. Here are the eligible property types. This is gaining more momentum. I will tell you, Advantage Conventional Home Style Renovation. Home Style is a Fannie Mae product, actually. It's an enhancement to their conventional program. It's not actually a separate program. It's just something they can do within their conventional loan program. This allows a borrower to purchase a home and finance the cost of renovation for that home in one single purchase mortgage. So just to give an example, someone wants to buy in a specific area because it's close to the schools they want for their children, or close to work, but the only homes within their price range maybe are homes that need a little bit of TLC, that, you know, they would like to make their own. Anyone knows that a first-time home buyer, I can tell you from my experience in the past when I was a first-time home buyer, when you go to look at properties, the first thing you're looking at are what are the big ticket items that I may have to pay for in the near future with these homes, the roof, the windows, anything like that, that could be a major cost. And for our borrowers, obviously, they're typically financing 100% or close to 100%. So they may have some reserve, they can have reserves. Obviously, we don't have an asset limit, but it's something that they look at, how they may pass up a house that would be a good opportunity for them, but it just needs some work and they don't have the funds to do that. What they would do here from this standpoint is they would put an offer on the home based on the sales price. That's no different. You'll negotiate the transaction exactly as you normally would. But in the meantime, they're going out and they're putting bids out or asking for bids out there for the work they want to do. This works on foreclosed properties or things that need fixing up to sell, so they can actually use it for that as well. So they would go out and obtain bids for whatever work they want to have done. And then they submit those bids to their lender, who then submits them to the appraiser. The appraiser actually does the appraisal subject to those improvements. So that home may sell for $100,000. That may be the negotiated price between you guys. And that doesn't change. That normal negotiation doesn't change. It will close just like it normally would. But the appraiser will do the appraisal subject to those improvements to being done. So let's say the purchase price is $100,000. They want to do $50,000 worth of improvements. And the appraiser comes back and says, this house will be worth $160,000 once those improvements are done. So that borrower would then be able to, it's the lesser of, so it's the lesser of the subject to appraised value or the cost of the purchase plus cost of renovations. So they would be able to do a $150,000 mortgage because that value will be there once that's done. And the nice thing for the borrower on our end is that we actually handle the escrow. We work directly with the borrower, title company, and the contractor to get the do the funds release and take care of that. And we work with them until that escrow account is closed. So from a real estate agent standpoint, this is an option. If you have a house that has really been sitting there because it has some issues, a lot of times people are looking for that move-in ready home, and there are properties out there, and especially in the affordable home space, this is really something that's needed right now. So it is gaining a little bit of momentum. We have made some improvements to it, actually, that'll be rolling out here shortly, but just another option for borrowers to purchase a home that may not be what they want as move-in ready, but they can make it their own. We just increased our down payment assistance on our easy close. It used to be 3% or $3,000, whichever was greater. We now increased it to 6%. A couple of reasons for that, and I'll go over that. I'm sure you're aware Fannie has made a lot of changes in the last couple of years. It's no secret that they and Freddie Mac are trying to get out of conservatorship from underneath the government. So what they've done is lessen the risk. They're trying to build as much capital and lessen the risk to themselves to do and able to do that. What that means is we would be considered one of those risky factors, even though our default rate is actually less than the national average. But we are seeing a lot more borrowers that are not getting an approve eligible through the automated underwriting system because of that fact. They're looking at things a little bit more differently. So what that's doing is forcing a lot of people to go FHA. So I just want to prepare you as realtors that you're going to see that going forward. And I'm going to touch on that in just a minute. But so what we did is we increased the easy close to be able to allow the borrower to either lessen their loan to value on their first mortgage, which can also reduce their mortgage insurance cost and lessens the risk on Fannie Mae, or they can go above 100% and cover other things. So they can use this on both FHA and conventional. We have seen FHA seems to be embracing this, no problem. So, but it's just another option in our way of trying to help our borrowers do what they can to be, in that space. So because of this, right now, WHEDA, in the past, WHEDA required our lenders to have their direct endorsement with HUD in order to offer WHEDA FHA. Now, because these changes are happening and we're seeing more business going towards FHA, we want to make sure that some of our local banks and credit unions that don't have that direct endorsement with HUD be able to be competitive within their market and help more borrowers. So we are allowing them to offer FHA through WHEDA sponsorship. So basically, they're originating and processing the loan, but we're doing the underwriting and they're doing it through our sponsorship. So it's obviously we're well versed in underwriting FHA loans, but that's something that we've opened up, and just so you're aware, because the changes Fannie has made have really shrunk the available affordable space for some of our borrowers, and our borrowers being those specific borrowers that are in the affordable space, don't have a lot of down payment, need that down payment assistance, and are just trying to get into home. This is another option for them. So I just want to prepare the real estate environment for the fact that you're going to see more offers with FHA financing. And one thing I am working with several of our lenders on is reaching out and discussing FHA with realtors, because let's be honest, FHA has a stigma, and a lot of realtors don't really, they see that HUD financing and that HUD appraisal and they're like, oh no. And it may deter a seller, especially in this market, from even considering that offer. So if you are a seller's agent, it may be something educating your seller on things they may need to fix or, paint, chip away the chipped and peeling paint and repaint it before that appraisal even happens, or something. Be knowledgeable of what a HUD appraiser is going to look for, and prepare your sellers for that. Hopefully this will not leave them out of the market, but I just, an FHA program it's not a bad program. I'm sure it's a little bit more restrictive on the appraisal side. We understand that, but we still want these borrowers to be able to get into the affordable home space. Obviously, they should have just as much ability as someone else, but just want to put that out there so you're aware that train is a coming. This doesn't really impact you guys, but it may impact a seller. We are rolling out sorry, this is not updated. It's now June. It's coming out in June. We have changed it a little bit to make it a little less restrictive. We offered this in the past, but now we've expanded it to be a kind of a better and bigger program. This is actually for current homeowners. We're going, even if they don't have a WHEDA first mortgage, we're going to be offering this home improvement loan program. So they can actually go up to $50,000 or 125% value to do some renovations on their home. And this may be something that those sellers are having a hard time selling their home, or want to do some improvements to increase the value of their home to sell it for more money. This might be an option for them to do that. And it just will be a way for us to help residents in the state of Wisconsin open up more availability to some affordable housing. We, in the past, always, obviously we have a consumer page on our website and we educate consumers on our products and things like that, but we didn't do a ton of outreach because we don't work direct with consumers. But we've kind of changed that. We're ever evolving. It's our mission to help everyone. And we really want to get the word out, let people know that WHEDA is out there, what it is, how it can help them, whether it's an option for them. But also, it's more of an education piece just on the home buying process. We are now offering first-time home buyer education seminars. They don't meet the standards for like home buyer education for a loan, but they are just truly educating the borrower on how to prepare themselves for home ownership, budgeting, credit, things like that. Because regardless if they get a WHEDA loan, we want to prepare them to be adequate, good, successful homeowners going forward. So yes, we talk about WHEDA a little bit, but it's more of an education piece for them, and reaching out to all communities, letting them know that we're here. We are here to do the education and help you out in whichever way we can. We do get a lot of consumer calls. It's kind of a passion of mine. I was a loan officer for over 10 years in my past life, and my specialty was first-time home buyers. So I did a lot of counseling, a lot of hand-holding, and it's sometimes fun to see that success in the end for them to be truly ready for home ownership and be successful going forward. Because even more important than getting them into that home is keeping them in their home. So you'll see that as well. We are going to be offering a consumer boot camp coming up here pretty soon, probably virtually, to help educate people all over the state on how to be a successful homeowner. And then this is just our sales team, and the area in green is my coverage area. So I see a lot of the state, which is awesome. And I actually will be covering Door County as well, because we are doing a rural housing initiative right now throughout WHEDA. So that is specific to Marinette, Bayfield and Ashland, or the Chequamegon. I always say that wrong. And then Marinette County. So we are just really trying to expand the ability for more borrowers to be prepared and successful homeowners and in an affordable space. So with that, are there any questions? Anything else that you would like information on?
There's nothing in the chat box.
And if anybody has any questions for me, obviously my email is there. We also do have just a general email box, sales@wheda.com. You can certainly email us. I do a lot of presentations for realtor groups, consumers, I mean, all over the board. We really want, WHEDA to not be a 4-letter word to realtors. We want you to understand that it's a really good program. It gets people into a home that they may not otherwise thought they could do, and prepare them. I mean, even if they're not ready now, but to prepare them. But also when you see WHEDA conventional financing, it's really conventional financing. It's not, it's just a conventional appraisal. And a lot of our lenders are very well versed in it, and it should be a fairly seamless process, because we really do not have a lot of overlays. We do require that the borrower be owner, it has to be owner occupied, located in Wisconsin. It has to be owner occupied for the life of the loan. But, you know, other than our minimum credit scores and a couple other items, we do not have many overlays to what Fannie and FHA requirements are.
I think that I learned a lot, to be honest. So as a agent myself, I know that I see biases come in just with the FHA and the VAs and all of those.
Mhm.
So having the rider is definitely helpful to help make it a conventional, or to help a buyer have that down payment assistance, because some people just don't have that money saved
Right.
up.
Right. And or they saved up a bunch of money, and they truly want to save that money to make sure that they have a nest egg when they move in, so that if something goes wrong, they have that emergency savings for themselves. You know, there are a good majority of our borrowers, and sometimes the automated underwriting system requires them to have a certain amount of reserves. So they do have to have that money in assets. So not necessarily that they don't have the money, some don't, but they may just want to keep that for other things, or, you know, buying new furniture or all that fun stuff that comes with buying your first house. But I would say on the FHA side, the best thing you can do if you're a seller's agent, is if you have a home that you know needs a little TLC, or you're getting offers that you may anticipate getting FHA offers, just counseling the seller on what things that HUD appraiser is going to look for. Because sometimes they're really easy, not expensive fixes. I mean, you know, if it's just a window sill with a little bit of chip paint, you know, scraping it off and painting over it, that's it. They're not even going to mention it then. So being prepared before the appraiser comes, so that you're not hung up with those issues throughout the buying process, is also another way to look at it.
100% agree. Well, I want to not take up too much of your time, since we're going to cut this a little bit shorter today. I just want to say I really appreciate you being here, and
I'm happy to do it. Thank you very much for asking.
yeah, and I'm excited, and maybe we can do this again sometime.
That would be great. I would love to come and do it in person as well too someday.
Yes, we will get there. We will get there for sure.
Great.
All right, Sarah, I forgot to mention earlier that you are the vice president of the Alliance Wisconsin chapter. So just to let you guys know, you can reach out to Sarah and I for any of our events that we're having, or anything else that you have questions on, because we'd be happy to help you get involved more with the Alliance.
Is there like a subscription email that you guys have that we could subscribe to, or a website that we could follow to make sure that, you know, we're reaching out as well?
Yes, so I can get you that information. To be honest, right now the newsletter is done by me, so this is like, you know, April of
I do the same thing.
But you know, hopefully by like December of 2021, and when you're rewatching this video, it will be all automated and ready to go.
Perfect. Perfect. And if there's
But
anything
yeah,
we can
I will
do,
get you that.
yeah, if there's anything WHEDA can do to help the Alliance in any way, we're happy to do so. Obviously, we have lots of contacts throughout the state and would love to promote anything that you guys have.
Thank you
It's
so much.
exciting. I would really appreciate that partnership. So I'm looking forward to talking more about it.
Awesome. Thank you. Now on a side note, do you want me to just stop recording on my end?
Yep.
Okay.
Yep. Go
Sounds good. Thank you, everybody. I really, really appreciate the invite.
Thank you for being here.
You bet. And I'm assuming I need to stop the meeting as well.
Yeah.